Good evening, all. I'm Epstein, and here we are on Thursday, the 28th of September, 2023, 6:11 p.m. Central Time. So the markets act like we want to get some short covering coming into it. Why? Your guess is as good as mine. The markets might be hoping, ray of hope, that Congress has a way of getting things done just before the door slams shut. I'm not in that camp on this. The way I look at it, no matter what the House gets done and how fast they do it, you got to get it over to the Senate. The odds of those two bills actually making it without debate and a delay or two, and that, I think you've crossed that window. So now the question is, how many days do you see the government shut down? That'll be something that we have to watch and see how that's going to work. It'll be short. It won't be long because there's too much pressure on the politicians, and this happens, and we've gone through this before. And that brings me to this. I want to bring up that I want you to take a look at tomorrow's data. We may not get data from the government for a while. We can get it from the private sources, but we probably won't get it from the government. We're going to get the U.S., and this is a big number the market's looking at, the monthly personal income spending and the PCE index for August. That's going to come out at 7:30 in the morning. They're forecasting personal income up 0.4 on a month-to-month, and spending is seen up 0.4. Now, if the consumer keeps spending, then you've got a problem because they'll keep driving prices higher. Privately, I'm hearing a lot of traders saying, no, these numbers are going to start falling. Maybe that's what the market's getting a bit of a rally on. The Chicago, yes, I live in Chicago, the Chicago September PMI data is going to come out at 8:45. It's expected to give you a reading of 47, and that's a positive 47 compared to the prior month's 48.7. And the University of Michigan is going to give us all the September consumer sentiment indices, and they'll come out at 9 o'clock. They are hoping that the September consumer index comes in at 67.70 compared to the prior month. So steady. But the reason I'm showing all that tonight is this could be it. You might not get data from me in the government data for a while. Not my fault. We'll see what's going to go on with the government one way or the other. Gold is up tonight a little bit, but remember, this market has let go to the downside in a very big way. It cracked through the 1900 level. Copper has actually done a better job of holding than a lot of people have given it credit for, especially with the big problems with Evergrande, where now they've suspended trading on all the exchanges where it's traded in China. The chairman is under what we call house arrest. They're looking for criminal activity. People that were working in the financial unit from them, they've disappeared. Nobody knows. Well, you never get told where they're at in China. But you can see a little bit of a bounce there. The dollar today, some profit taking at the expense of currencies, which rallied a little bit off that news. And I was surprised with the dollar down. You didn't get any support anywhere else. We're getting a little bit of short covering in the bonds and the notes as the markets do this. They're scratching their head going, now what do we do if we get into the government shutdown? Does it impact us? Doesn't it? That's the talk. I was watching today, CNBC had a very lengthy interview with Bill Ackman, a Persian, and he's still thinking 5% 30-year bonds. I mean, that's quite a bit of a move from where you're at right now. So he's really betting the ranch that interest rates won't make it. They're going to continue to keep climbing, and the pressures will stay on the economy. Fascinating. You might want to go take a look at that yourself. So let's take a look and see what we've got. This is a weekly chart of closes. And when the market is underneath the 18-week moving average of closes, the bias of the market I consider down. Now, what that does is it filters my other technical work. Am I looking, if I get a buy signal under the market, to take it? The odds are no. Why? Because the main filter is the bias is down. Rallies would be bear market rallies, not an event that's saying, the trend is up. When you look at gold, you can feel the pain. This is a market that was just pushing here at 1970. It's down $100 an ounce in but 1, 2, 3, 4, 5, 6 days. Wow. Kaboom. That's a big break in the gold market. And I feel good that yesterday I told traders, I said, watch out, this market's about to crater. And it did its job and followed through today. So I was very pleased with that. When I look at where the market's got problems, you're under the 18-day average, you're getting another crossover. Now you're getting the 100-day average getting under the 2. So think of how this works in moving averages. A purist in moving averages on a bear trend wants to see the shortest term trend followed by the next, the medium risk, the medium one, which would be the 100, and the longer term above that. That's called a bearish setup in the market, and it's what you have. Do you go short under Bollinger Bands? You know my teachings here. I teach you over and over. I don't care that that fell like that. Immaterial to me. My question is, do you deploy new money on the short side? And the answer is no. How many times do you stay under the Bollinger Band as you look here? And I know events happen. You've got 1, 2, maybe, is it 3 days under? Let's see, we can't count today. That day was under the Bollinger Band, under the band. But this day finished at night. Yep, 3 days under. So you rarely go to 5. So could I see profit taking at any time set in? Yeah. But this is very bearish. All it would be is a market back into there. I think the people caught are probably looking to bail on the market. I don't see reasons to suddenly say, oh, I got to own gold down here. Maybe you see it, I don't. And remember, you've lost another buyer. China tomorrow goes on the Golden Week. So for a week, they're going to go out on vacation on you. And the country really, I mean, people take off. I remember COVID, they wouldn't let them go anywhere. That's over. So they're going to be traveling. They're going all over the country to see family, other places, vacations, whatever. So be careful. That's going to go on. That takes a buying element out of the market. When we look at the gold silver, now that you're under this, that means that what? The smaller the number gets, silver's getting stronger than gold. That's how you look at it. When I come to the silver, notice how it stopped declining against the lower Bollinger Band, whereas gold's still falling straight under it. Very big difference in how the scenarios are playing out. And in the copper, you got oversold. Yes, you ran the lower band, and I teach you don't deploy new money under a band, and I'm very happy. But what I do see in the market is probably resistance back at the 374 level. I don't see a trade set up there in any manner or a trend that's tradable. In the platinum market, still bearish, looking for more of a rally here, but I think the 18-day average will offer resistance. You take yourself out of the bear trend if you get over the 917 level, but you have to prove that. So I think what will happen first is you're going to see the pros going short up here and trying to defend it not to get over that number. If it gets over it, they'll just go, okay, I don't have to be involved. And in the dollar, just yesterday, you were up and over the band, and I said, no, you don't buy over Bollinger Bands. I think you'll pull back. Now, you could be setting up for a heck of a correction where this move has run its course in the near term. If you lose the embedded reading with the closing under 79 tomorrow, I would not want to be holding that market long. I'd wait for the new setup. It either re-embeds right away or you get a further correction, which could easily carry back to wherever that 18-day average of closes is. So you put it together, you got game plans. So let's assume the government shuts. How are you going to keep up with all the market information you want? Who's doing what? What's going on? We want to be your guy. We have a whole team that writes all day long. At Linn, the research is second to none. I've been around this game 50 years. These people write some of the finest I've ever seen, be it price count information, be it on the financials, be it the spreads, what are the cash markets doing, what are the traders doing in option strategies synthetically, long, short, which way are they going? All day long, we're writing this with charts to go along with it. So if you haven't seen what really professional commodity information looks like, I want to show it. And remember, this is an everyday occurrence. We even write on the evening. We write a little bit on Saturday. So Sunday night, you'll get some of these. IraEpstein.com. Go to the top up here. What do? You'll see an icon. Give it a click. If you go to Ira Epstein, go to the free offers, Linn Research, and sign up for the other offers there as well. You'll need it if we see the government shut down for a bit. We have a lot of stuff to help you get along. I'm Ira Epstein. You have a great day. See you tomorrow.